Welcome back. Another big issue that drives voters to the polls is the economy and jobs. Andrew Root with Regent University School of Business joins us now to talk about this important voter issue. Welcome, Andrew.
Thank you, Mike. I appreciate it.
Yeah, thanks for your time. First of all, how strong is the economy really, and how much of that is a credit to President Trump?
Great questions. The economy is very strong by any measure: unemployment, job growth, income growth, productivity. Any measure you want to look at right now, the economy is strong. Exceptions might be in housing, where things are a little bit softer. Most of that credit versus what we saw in the prior 8 years does need to go to the president. The reason is he has engaged in regulatory reform and fiscal reform. People know about the taxes, but the regulatory side of the changes have been very significant to getting business productivity going and really freeing up business investment. So the acceleration we've seen in the growth rate and the state of the economy today really is attributable a lot to what's happened in the last couple of years with fiscal policy.
What sways people more in an election year, a good economy or a bad economy?
Yeah, I think it's clearly a bad economy. People are much more averse to pain and loss than they are to gains. I think the economy had been growing into the 2016 election, and yet there was still a desire for change that superseded what was going on with the economy. Right now, though, the economy is better than it was, so it will be somewhat motivating to people, but it's not quite as motivating as if the economy were actually in recession at this point.
How long will this expansion last until we could see possibly another recession?
Yeah, that is an excellent question. That is really up to the Federal Reserve. What's been happening in the last month or so is that the stock market, which is a leading indicator, has been much more volatile. The reason it's been much more volatile is that people are concerned that the Federal Reserve will raise interest rates too far. And for people who are getting a mortgage, for people who have Capital One or Discover as their credit card provider, they realize that credit has gotten tighter in the past month, and that's going to lead to a deceleration in the economic growth rate coming in the first quarter of 19. That doesn't mean that we have to go into recession. The natural state of the U.S. economy is growth. It grows much more often than it shrinks. Having said that, if the Federal Reserve does continue to raise interest rates all the way through 2019 as they have advertised, then there's a reasonable chance we would have a recession in the second half of 2019. If they become more data dependent, if they just follow what's happening in the economy and what they're reading with people, then I think this expansion can go on for a long time.
Well, let's break this down in practical terms. How has this stronger economy affected the paychecks of people?
Yeah, and that's really where I think probably from the perspective of the election, that's the most salient issue. Right now you've got income growing 3.1% year over year. That's the best result for individual paychecks since the financial crisis in 2008. So individuals are feeling more cash flow, they're feeling more discretionary income than they felt in over a decade.
Let's talk tariffs now. There's been talk that these new tariffs by President Trump will hurt the nation. What are your thoughts on the tariffs?
Yeah, I think in general, tariffs are akin to a tax increase in that the cost has to get passed through somewhere, but there are benefits to tariffs. In the early 1980s, President Reagan instituted quotas for foreign automakers. That led to what is now a pretty robust manufacturing sector for foreign automakers in the U.S. So the long game in tariffs can be a little bit more beneficial. And I think capital markets give the president some leeway on that. I think the uncertainty in general, though, is something that gets priced in capital markets. So while we're in this period of uncertainty and negotiation, that is going to cost a little bit more to raise money. That will cost a few basis points of growth off the economic growth rate. But overall, it's nothing nearly as important as what's going on with the Federal Reserve and fiscal policy.
Well, people at home want to know if these tariffs are going to help or hurt American jobs. Can you talk about that?
I think from the perspective of manufacturing jobs, it probably helps. I think from the overall perspective of, does it cost me more to buy things that are imported from other countries? Yes, it will. At the margin, does that mean a little bit more inflation, a little higher interest rates? Yes. That's kind of something that's not that tangible to people. I think if you work in an industry where you're absolutely being disadvantaged because of unfair trade practices, I think you probably feel like what's being done right now is the right thing.
Yeah, so he talked about, evening the playing field as far as when it comes to trade. So in essence, this is him keeping a campaign promise?
Yeah, and I think the easiest way to understand how fair or unfair the current trade system is all countries except for the U.S. want it to stay the same. So that should give you some indication that actually it is true that the U.S. has generally been more lenient with its trading partners in order to help those people become more thriving economies, and ultimately that helps the U.S. At this point, these economies don't really need our assistance, and so leveling the playing field, which is what the president would say is the right approach. I think all that ends up happening in practice is it gets a little less uneven toward the U.S., which, as dynamic as the U.S. economy is probably all that we need.
Okay. All right, Andrew, thank you so much for your time today.
Thank you.